If a buyer asked for your numbers today, would you feel confident or start scrambling? Because many agency deals don't fall apart because of the client list. They fall apart because the financials don't hold up. I'm Craig Cody, I'm a CPA, and we work with marketing and PR agencies doing between $1 and $10 million a year in agency gross profit. And today, I'm going to walk you through exactly what breaks when a buyer looks under the hood and how to fix it before it costs you millions in valuation. Your revenue is not what you think it is. Most agency owners show top-line revenue, but it's inflated. Media spend, pass-through costs, subcontractors, it all gets lumped in. So your $5 million agency might really be a $2 million agency. Why does this happen? Because agencies don't separate agency gross income properly. And when that happens, everything downstream, margins, profitability, valuation is wrong. The solution is to track agency gross income, which is gross profit, not just revenue, because that's the number buyers care about. That's the number you can actually spend, because if you're collecting $1 million for media, that's not your money. An example is we've seen agencies overpay taxes, overhire, and overestimate profit, all because they didn't separate this correctly. The problem is the buyer asks, what's your gross margin by client? And you don't have a clear answer. Or worse, margins are all over the place. Why does it happen? Because agencies don't track cost of delivery by client, utilization, true labor costs. They just look at total profit. The solution is to break it down. Gross margin by client, people cost as a percentage of agency gross income, overhead as a percentage of gross profit. If you can't explain where profit comes from, neither can a buyer. An example of this is we see agencies with profitable P&Ls, but 3 clients are actually losing money, and that can kill a deal real fast. Another problem is your books are technically accurate, but they're messy. Personal expenses are mixed in, random add backs, inconsistent categorization, and why it happens. Because most agencies use a generalist accountant who doesn't understand agency math, and that leads to bad assumptions and bad reporting. The solution is clean financials monthly, a clear P&L, an accurate balance sheet, proper classification of expenses, because buyers don't want to figure it out, they want clarity. If a buyer has to question your numbers, they discount your value or they walk away. You don't know your cash flow story. The problem is profit looks good, but cash is tight. The buyer asks about AR agency, cash flow trends, payment cycles, and things don't line up. Why does it happen? Because agencies don't consistently review these things. Accounts receivable, accounts payable, monthly cash flow. The solution is to know your numbers monthly, and cash flow is not optional, it's survival. As I always say, the 2 things that keep owners up at night is making payroll and having the cash to do it. If your cash flow is inconsistent, buyers will assume risk, and that's going to lower your valuation. Quick question. If a buyer asked you today about your numbers, what would be your weakest area? Drop it in your comments as I read them all. So here are some key takeaways. If a buyer looked at your agency today, here's what things typically break. Revenue is inflated instead of true agency gross income. Margins aren't tracked at the client level. Financials are messy and unclear. Cash flow doesn't match profitability. And none of this is about working harder. It's about understanding the business side of your agency. If you want help cleaning this up before a buyer ever sees it, that's exactly what we do. We help agency owners increase profit, improve cash flow, reduce taxes, and get exit ready the right way. If you like this video, subscribe below and watch our next video. All right, before you go, if you're an agency owner and you want to keep more of what you make, I've got 2 things for you. First, grab a copy of my book, The 12 Biggest Tax Mistakes That Cost Agency Owners Thousands. It breaks down the exact mistakes I see every day and how to avoid them. Second, if you want to see what this looks like for your business, get a free tax analysis. We'll take a look at what you're doing now and show you where you might be overpaying. And if this video helped you, make sure you subscribe so you don't miss future strategies on tax planning, cash flow, and building a more profitable agency. I'll see you in the next video.